Welcome back to NYSE TV Live, everyone. I'm Kristen Scholler here at the Stock Exchange. VC firm Energize Capital has its sights set on a greener future. Here's some fast facts about the company's operation. Energize Capital is a climate software investor looking to empower the new energy economy, aiming to accomplish this by investing in early-stage startups and mid-stage growth equity firms. Notable limited partners include NYSE-listed companies like General Electric, Caterpillar, and WEC Energy Group. Juan, Muldoon, partner and co-head of ventures at Energize Capital, joins me now. Juan, it's great to have you on the show this morning. We've been asking many of our guests in the wake of the election results a few weeks ago and the wind down of earnings season, the state of play in their specific market. How do you see what's unfolded in the past few weeks impacting the space that you invest in?
Thank you, Kristen, and good morning. Thank you for having us. First of all, I think that the energy transition will continue, not just because it depends on one political party's rhetoric or positioning, but because it makes economic sense. And I think if you see what the incoming administration is going to do, it's going to align very well to that. In many parts of the US, and frankly, all around the globe, technologies like wind and solar and batteries actually today provide the lowest cost of electricity production. And we actually see those costs continuing to fall with greater technological advances. So while there's been a lot of rhetoric about how government support will change, we actually see that it's going to be very well supported by fundamentals. And many of the benefits that we've seen from the Inflation Reduction Act and other initiatives under the Biden administration, we expect will continue because they actually benefit all Americans through job creation and lower energy prices. And so while the rhetoric maybe has increased around the direction of the energy transition, we actually don't think it's going to change dramatically. And we're very excited about the opportunities ahead.
Juan, what are some of the specific companies or founders in this space that you're following?
Yeah, great question. So at Energize, we focus mostly on capital-light solutions that are driving the affordability, the reliability, the security that is driving the energy transition. We invest in companies around solar software, for example, that is helping to reduce some of the soft costs associated. Similarly, in batteries, we actually have several investments in the battery ecosystem that can help optimize these systems and these assets at scale. And several investments that maybe have been born outside of the energy industry, but are actually incredibly important around cybersecurity and other ways that we can continue to optimize our energy and industrial system.
I want to get your take on how the companies that you work with and invest in are preparing for a new administration, notably when it comes to tariffs. An economist joined me earlier in the show saying that some companies are moving up orders so that they don't potentially get hit with tariffs down the road. I want to hear more about the supply chain of the companies that you work with.
I think there are definitely going to be challenges. The energy transition, frankly, has never been for the faint of heart. And beyond the rhetoric, maybe, but perhaps no surprise, we do see some uncertainty around support and incentives, particularly around tariffs. So around tariffs, the energy transition supply chain is heavily reliant on China today. That is changing very, very quickly as companies are building out new manufacturing capacity for energy components here in the United States. There are several manufacturing facilities being built for US-made solar panels, for example, in Ohio and Texas and elsewhere around the Rust Belt. And so the energy industry is working very, very hard to diversify its supply chain and to strengthen its supply chains here in the United States.
What's the adoption timeline, one of these new and emerging technologies in the energy space that you're investing in?
It depends. So, where we focus really is on companies that are working with technologies that are already de-risked, so they're already viable from a technological perspective, and they're also viable from a commercial perspective. So, again, think wind, solar, batteries, electric vehicles. So, while the technical development cycle for net new technologies could be measured in decades, once you get to that place where it's cost competitive, you see a very, very quick S-curve for adoption, like, for example, what we're seeing in electric vehicles, which here in the United States, despite all of the rhetoric, sales have continued to climb.
I do want to talk about deal activity because we are expecting, at least in the publicly traded market, more deals to be happening. mainly due to deregulation and looser restrictions, if you will. But of course, in your space, some of it might rely on borrowing costs as well. And we follow that Fed funds future rate so closely because of that. What more can you tell me in terms of the amount of deals and deal size that you expect?
Yeah, absolutely. We actually agree with you that rates are going to be the better driver or the better signal, I should say, about deal activity. And we expect 2025 to be very busy. We think that a lot of the companies that we invest in that are at scale and also profitable are going to be potentially very attractive candidates for the M&A markets and the public markets when they open up. So we see deal activity, at least for the companies that are at scale, increasing. Now, I will say a lot of the rhetoric has maybe driven away some investors in our area, which we see as potentially net positive for the ones that are going to endure.
All right, Juan Muldoon, partner and co-head of ventures at Energize Capital. Juan, great to see you this morning, and thanks for joining.
Thank you for having me.